welcome back to Stock Talk. So for the past few weeks, I've been talking about MACD and ADX, important indicators as a part of my process during the lessons at the beginning of these shows. Today I really want to spend some time talking about price and I want to show you a specific price pattern that I think can be used with what I have been explaining on those indicators over the last few weeks. Just something to look for. And I think if you use it in conjunction with that, it can give you a lot more confidence as you go through individual stocks looking for which ones are the most attractive or which ones you want to play. So let's go straight into the agenda. The pattern is called an undercut and rally. Some people, the Wyckoff people would call it a spring. I coined this, I didn't actually coin this phrase, this undercut and rally pattern. It's actually a guy named Gil Morales, who's an O'Neill disciple, coined the phrase. But the reality is I've sort of taken it and turned it into my own. I use it with my indicators, my moving averages, and then I also use it in multiple time frames. And so I'll show you what I'm looking for on this pattern. And then I want to go through all of the stock requests that came through. We had a lot of them, and I actually have a few that were left over from last week. Before I get into everything, let me just say that my services can be found on rabilstockresearch.com. And if you go to the services page, the individual package monthly and plug in Stock Talk into the coupon code, you can get my reports for the first 2 months for $50 as sort of a trial to be able to evaluate it. I go through thousands of stocks on a regular basis trying to identify the best looking patterns I can find. So let's go ahead and get into the undercut and rally. And I want to make sure I laid this out for you first, and then I'm going to show you an example on an individual stock. So the undercut and rally is essentially where a pattern where you've tested a key support area a number of times and then you break it, but you only break it for a very short period of time. So it might come down for 1 bar, and this can happen on any time frame. So I'll just say like for 1 bar or 2, and then you immediately get back up. And so, like I say, this is somewhat similar to like a spring in the Wyckoff method, or other people have called it a lot of different things. But the fact is that we're looking at a key level that's broken, and it's sort of like a false breakdown. And so, one of the things I like to do when I'm looking at that is make sure, number one, that the higher time frame is in an uptrend. So I don't want to just look for stocks that are making this break and then reversal. I want to have the wind at my back. I want to make sure that the bigger trend is to the upside. And then the other thing that is real important is when you make this break, even if you don't have follow through, I really do prefer it only last for a week or two, or I should say a bar or two. If I'm looking at a weekly chart, I don't want it to be down below here for more than a week or two before it starts to turn around. And then one of the things I do like to do once this starts to creep back up through here is go down to the lower time frame and try and find entry at an earlier spot. There's nothing wrong with waiting for a pullback on the time frame that you're looking at on this pattern, but you can get an earlier entry going down a time frame. And so that's really how I use the multiple time frames. I'm looking at the bigger time frame to make sure the trend is up, and then I go down to the lower time frame to try and improve my entry. So that's really where, how I look at this. I think this will make sense as we go through the example. So let's look at this chart of Adobe. And I've got the monthly and the weekly and the daily here. And so I want to focus in on the weekly chart because this is where the stock, and I'll just show this here, where the stock was moving sideways. And if you notice, it undercut this level right here. And also realize I've been talking about the zero line reversal. Notice what took place when that was undercutting. And we had low ADX. So this is the type of thing where I'm trying to combine it in conjunction with what I've been talking about in the indicators. I want to look at price and see if I can get an extra advantage. So we have this break of support, and then if you notice, it had a reversal the next week and got back above. So that's the type of thing that I really want to be on the lookout for when a stock is in an uptrend, because notice what was going on here on the monthly chart. When that dipped down, it was dipping down towards a rising 18-month, which was above a rising 40-month. We had good momentum characteristics in place. So the wind was at our backs here. And then we're getting this extra little dip to shake people out. What people are considering to be a breakdown is actually an opportunity if you're watching and you're understanding what's actually taking place. So this extra dip comes down to the 18-month. It causes the zero line reversal, and then you get an immediate reversal. Now, we could wait for the move to the upside and then the first pullback, which happens to be a pinch play, another thing that I mentioned over the last few weeks. Or you could go down to the smaller time frame, and you had some entries there. Now, this would have been in conjunction with this reversal here. And this move would be in conjunction with this here. So I like to go down to the smaller time frame, improve my timing, make sure that it's really getting ready to go again, and not just jump in because I'm hoping that it all looks good. If I can combine the three time frames, then I have, strong trend behind me. And I know I've got a pretty interesting pattern developing with supporting evidence from my indicators. And then I can improve the timing by going down one more here, one more time frame here, and looking for improvement both in a MACD basis and moving averages, and showing also trend line break, test of the low, and then a reversal back up, and then another trend line break, and then a move up, a test back of support, and then you move back up. So if I can combine these things and see what's happening on the smaller time frame, I think I can really get my timing to a point where I feel like it's going to start to move in my favor immediately. And so that's kind of the goal there. That's what I'm trying to do in terms of going down to a smaller time frame. Now, it doesn't always work, but that's really what we're trying to accomplish with it. So I will have a few examples that I'll be able to go through when we talk about the individual stocks as I'm doing the requests. So let's go ahead and get into that now. Okay, we're going to start with Caterpillar. Actually, let's go back and look at another example of this undercut and rally pattern on the monthly chart. Now, we don't have an 18 on the quarterly to show on this, but notice what took place, how it went sideways, and then we had this drop down. Look at the 100 big round number as support, and look at all the price support underneath. So it still qualifies as an uptrend in my view on the higher time frame, just based on that. And also notice the zero line reversal pattern. And then we had this setup on the weekly chart with the push up into resistance and failure, and then a higher low made. Then we got through the moving average and then formed a pinch play. So nice combination looking at it from a monthly and a weekly. So just keep an eye out for this on all different time frames. If we look at Caterpillar now, notice how the 18-week has rolled over. And the one thing I would caution you against is, I know this looks like it's found support at 200 and it might just want to go and just continue to push through to the upside. But my feeling is when this turns down, that I think there's a pretty good chance that maybe MACD pushes up and then comes back down and forms somewhat like a double bottom. And, it is possible this will push through first and then get a pullback while the 18 cups around. But just rallying into that declining 18 like this, I would be more inclined to believe that we've got more work to do and that it's got to consolidate further to the side before it's really ready to go. So we're still pretty far from the 18-month as well. So I just think more time here. I like the long-term pattern on this. I just don't think in the short term it's ready to go. Danaher has made a really nice move, obviously been in a very strong trend. It's started to accelerate here and getting a little stretched away from the 18-week. We're probably going to work our way up towards the target around 325 in this. The momentum characteristics are good. It's too late to buy in my view, but I'd continue to hold this until I saw either a sign of climax or a momentum divergence. Let's look at NVO. So the difference here is it's very similar to the DHR in terms of the trend, but notice what's taken place recently. We had a pattern. So this was the trend moving up. And you can see it based on the slope of the moving averages. That's the slope of the movement of this trend. It was very orderly. It kept checking back. Now notice what's taking place. We've moved into a surging market phase, and essentially we're taking the moving averages to a higher level to a different slope. And when I see that, I'm starting to think more like ending action, climatic activity taking place, something to be on the lookout for if you're long a stock, and looking for an exit point. Also, I recommend looking at the size of the bars. Notice how these have all been pretty small bars, and then all of a sudden we get kind of a big bar here. I'd prefer if this is a completely green bar, just a big green one like that without any wick to it. But the concept is still valid when you get a big move at the end of a run like this in a single week. It's usually a good spot to take a profit there or the following week. And again, we're at the 100 area, so that's not a bad spot to be thinking about that. Let's go to WBA. What I like about WBA, if we drew in a trend line like this, we have a break of the long-term downtrend line, and we rallied up to the 40, and now pulling back to the 18. This is one of the patterns from my book, a 40 to 18 bounce with MACD holding. So we're pulling back to an 18. So this is forming a pinch play with the MACD doing what it's doing. So these are good long-term signs. Now we need to see some improvement here. Pretty good ADX pattern on the weekly, but I think based on what's taking place right now, there's more consolidation coming with the declining 18-week. Similar to what I was saying about CAT, I don't think it'll get right through 51 on the first try. I would expect some consolidation here before it's really ready to get going. So interesting one to watch, but hasn't really gotten going quite yet. DPZ, I got this request a few times. So look at the monthly, look at how orderly these moving averages have been. And now just recently, we're starting to get some separation between the two. Price is separating from the 18, and the 18 is starting to separate from the 40. So we just want to be aware of that. The momentum conditions are good, but we want to look for these little nuances to tell us whether we're getting a little ahead of ourselves on the monthly chart, and are we increasing the odds of a correction, which I think we are. We're getting close. The good news about this stock is the momentum conditions are good, and even green DI is not showing any sign of divergence. So if we were to pull back and go to another new high and green DI not make a new high, then I would start to think we want to pull back some, at least to the 18 weeks. So something to be on the lookout for in that stock. Let's look at Whirlpool. Notice on the monthly chart first, even though it's stretched away from the 18 a little bit, look at this big breakout area at 200. Ran up to 250 and now has pulled back to the breakout area. So I'm kind of encouraged by the look of that. I think there's a massive amount of support underneath in the low 200 area. What bothers me in the near term is that this broke the 18-week and it doesn't look ready to get going quite yet. I think there's more sideways coming. Lots of support at 200. Probably a little bit of resistance up around 235 or 240. It keeps it in a channel for now, but I think we need to be on the lookout for more upside coming in this. If I'm long this stock, then I want to stay in it as long as it holds 200 for sure. And I'm looking for another opportunity. I just don't think it's here quite yet. FedEx. So FedEx made a higher high. We'll just do this on the weekly chart. Strong move to the upside, and then we had a kind of a sharp pullback here. And then when we rallied back up, without much consolidation, we rallied to a new high, and MACD did not confirm, and neither did ADX. So now, one of the things I'll tell you is divergence doesn't mean reversal. It doesn't mean we're looking for this to drop all the way back down. What we're looking for is a pullback to support. And in this case, I would say, support is around 275. It could end up being more like 265. This is really kind of like the little breakout area. So somewhere in that zone is where I would expect this to find support and start to gather itself again and maybe start to build new support at this area. So we want to see the MACD get down down closer to the zero line. It just, you know, so, I mean, it could be a big reversal, but I wouldn't plan on it based on a divergence like this. When I look at the longer term time frame, I just think there's way too much support down in the mid 250s for this to be a big top quite yet. Let's go to Merck. So one of the things that bugs me about Merck, I'm going to just pull up this chart. And actually, let me just say to anyone who's new to this show. So I've got the monthly chart here with the MACD and ADX and 18 and 40. And then I have the same thing on the weekly and the daily. And then over up here on the left, I put up the relative strength line in black relative to the S&P. And then I use a 30 period moving average with that. So I like to look at this all by itself sometimes and look at how poorly this stock has performed relative to the S&P. The thing that really bugs me though is that you have to look at this relative to, if you pull this up versus the drug stocks as a group, it's underperforming the group as well. I mean, go look at a stock like Pfizer or Lilly and look at the big moves that these have made recently. And this is just languishing. It can't get anywhere. So I would have no interest in this until it can get through 80. And I want to see it get through 80 with a vengeance. I want to see a big green bar breakout and some volume expansion. If this is going to really get going, we want to see it tell us that. Let's go to Nvidia. Nvidia, I spoke of about 3 or 4 weeks ago, so I'm okay to bring up these. I usually don't want to talk about a stock again within 4 weeks. So unless there's a big change in the pattern, I probably won't do a repeat of what my view is, just because my view doesn't change that quickly. Again, unless there's a big change in a stock in its pattern. So here's an undercut pattern. Actually, let's look at this on the weekly. I want to keep your eyes open for this, right? Look at this undercut here. It didn't quite make it to the zero line, but very, very strong trend in place. So we had the undercut, and then on the daily chart, look at this reversal pattern with MACD forming and holding the signal line while this was pulling back. So that was kind of a neat little setup. And then you had another sort of pattern here with the move to the upside and pull back, a little pinch play. So kind of neat from that standpoint. All right, so we've rallied up and hit, I think, a little bit of a target area around 210, and I think we're in the midst of a consolidation. It's pretty extended. I would consider this more of a hold than a buy. Now, I would consider this as a trading play. If this works sideways a little bit more and then takes out these highs, again with some price and volume expansion, then I might consider playing this for a shorter term trade. But right now, I need a little bit more consolidation. I don't think it's quite ready to get going this second. STLA. So we had this move on the monthly chart that started at 5. And we have not made, we made just last month, we finally made a lower low on the monthly chart. Every month up until that point made a higher bottom. So this is a pretty big move over the course of the past year and a half. I'd like to see this spend a little bit more time consolidating myself before considering it from a longer term standpoint. We just had a really nice entry on the weekly chart. And something we want to be on the lookout for, I have mentioned this a few times, is this reverse divergence pattern in MACD. Something to be on the lookout for. I tend to prefer it. Again, this is from my book. So, but I would tell you is that, you know, at the 18 or at the 40, I like to see the divergence take place where it's finding support at one of those two. Now, this didn't actually have that, but we do have the 18 and the 40 still rising, and we have a strong ADX condition. So something to be on the watch for. Now we've sort of gotten the benefit of that, and we're at a new high. Next target in this is probably around 24.25. If you drew up a trend line off of these peaks, you'd be looking right into that mid 20 area. Let's go to Pru. Now, I think it's interesting because a lot of the financials are showing this pattern. I think this is very attractive. Let's start with the monthly. We had to break the downtrend line, and and MACD is crossing back above the 0 level. We don't really have the ADX in place on the monthly, but we had a big climatic low, and so it's probably lagging a little bit. And we have to recognize what took place in price in order to understand the ADX. Sometimes ADX lags, and this is not telling us anything that negative. It's just not giving us a lot of confirmation. But if you notice the price pattern, we got back above this key area in the low 90s, and then we're back up against this resistance here, but we did get back above this resistance in the mid 90s as well. So I'm of the opinion that this is looking pretty bullish. And if we go and look at the weekly chart, I think it looks even better. Look at the reading on the ADX and how strong it was in that last up move. When I see that, I'm thinking upside continuation. That's what I'm thinking. Now, also notice that we came down, we undercut the 100 area and then reversed pretty quick. I like the looks of that. Now, most of the stocks in the financial area, not most, but a lot of the banks have some issues with an 18 that's rolled over. So it might take a little bit more time to get going in some of these. But this one still has a rising 18 week and a rising 40. It might set back and then go, but I think there's some really encouraging signs taking place in some of these financials. Target has made a big move and it continues to carry to the upside. We still don't see any sign of ending action. Ending action for me is either a climax move, what I described earlier, which would be a big green bar now. Look at the run that we've had. And now looking for a big green bar to suggest that we've reached some kind of a peak. Or what we'd be looking for is a pullback and then a new high, and MACD or ADX, or green DI I should say, move up and make a lower high. So we'd have divergence here and maybe green DI make a divergence, and price is making a higher high and these are making a lower high. That's another sign of exhaustion that I think we want to be on the lookout for. Neither of those have taken place. So if you adhere to that approach and make sure you use price as your trigger, then you just continue to hold this until we see some signs of ending action. We just don't have it yet. MELI, I'm glad someone requested this. This was actually a stock I had recommended in one of my reports recently. This is my 2 time frame pattern. I really love this pattern where we get a strong up move on the higher time frame monthly here, pull back, and had about a 1, 2, 3, 4 or 5 month pullback. And notice how the MACD held its signal line, sort of formed like a pinch play here. Notice how strong the ADX is on the higher time frame. And then we go through the correction, and this is certainly qualifies as an ABC, right? We get the down, up, down. That's a B, C decline. I'm not an Elliott wave guy, but I can count to 3. I can see that these waves, how they take place. And then we get the 0 line reversal with low ADX. So this is kind of the combination I'm looking for. Now, based on the fact that this overran the 0 line a little bit, as I've mentioned, I want to see this come up and consolidate. But notice how it held the 18 on the pullback, and then we got the trigger to the upside. This has gotten going really nicely. So a great combination and a great example of one of the patterns I really like. Now we're coming up towards this resistance zone up here. Good spot to maybe take a little bit off if you bought it down in this area. I'd consider trimming it, reducing, and maybe raising my stop a little bit. But the trend is good. We know we have big strength on the higher time frame. And so I'd be willing to see if this wants to eventually break out through 2000. UPS has made a pretty big move. It actually is it's pretty similar to the FDX, where it made the lower high in the momentum signs, even though this made a higher high, but not as drastic. What bugs me about this one is the violent break of the 18. You see how harsh a move? Always be on the lookout for these big red bars, okay? Big red bars and big green bars, especially. Now, here's where a green bar is very valuable. See this? Breaking out with a big green bar like this. If you find breakouts with big green bars, those are going to get continuation to the upside most times. when you get a big green bar after a run to the upside like this, look to be a seller either at the end of that week or maybe early the following week, something like that. But also be on the lookout for sell-offs from a peak with big red bars, okay? These are really simple concepts. Look at this is the biggest red bar we had going back. Look at how the size of that, and look at how long it takes for them to recover from that kind of a selling pressure. So I try and keep the candlesticks really simple. This is one of the things I look for. I'll keep mentioning some of the other things that I think are really important about the candles for me. But that's one thing to be on the lookout for. Now, I think now we're going to have some resistance over 200 because the midpoint of this red bar is around 200, a little higher. It's going to be a problem, I think, when this rallies up. So I wouldn't be any rush to be a buyer in this. And in fact, if I were long this from a lower spot, it's not a bad spot to consider doing a little selling if we got a little bit of a bounce. Let's look at Visa. So Visa keeps moving up, and look at the long-term trend. We don't have a change in the long-term trend. What's bugging me a little bit is we don't really have the momentum characteristics that we had early on. So this was in a power trend. Notice in 2012, the ADX crossed above 25, and it held it on the pullback in 2017. And now it's below, and it can't get back above, even though price keeps moving higher. So I guess the point I'm trying to make here is this from there through, where was that? Right around the end of 2020. This was the strongest part of the trend. Now we're in an uptrend, but we don't have as much confirmation on a momentum basis. So we need to be on guard a little bit more. And I would be a lot more reluctant to be a buyer in this now until it goes through a much more significant correction phase. Also notice how the even though this has been moving higher, notice how the relative strength really isn't participating with the S&P compared to the S&P. Let's take a look at Goodyear Tire. I like the reversal taking place on the longer term time frame. We want to be on the lookout for when the 18 has been declining for a long period of time on the monthly chart, and then it starts to turn. These are good signs. Now, that doesn't necessarily mean it's a buy right away, but we want to start watching this. And we have a declining 18 here and a rising 18 on the monthly. And when I see that, I'm thinking correction. If I'm above a rising 18 month and below a declining 18 week, then we're probably going to bounce around kind of like pinball between these two. And eventually the monthly should win out. I'd like to see the zero line come a little bit closer to the zero line or form some kind of a double bottom. And then this could get interesting. It probably take another 3 or 4 weeks before it's ready to do that. ADTN, strong trend in place. Now we've made a pretty big run and it's already gone from 10 to 23. We're trying to exceed these highs, but if you notice, we're getting a little stretched away from the 18-month. I like the condition of the momentum in place. I don't like the fact that we're overbought. Remember, we want to evaluate all these things independently. We're coming up against this high. Be a little careful about this. The momentum characteristics are good, but we want to look to maybe buy a little bit of a pullback in this. Don't be chasing it when we're getting up into this resistance zone. This is interesting, but probably something that we have to keep on a watch list rather than a nearby point. We have run out of time. Here's my contact information. Please send your stock request to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.